Right, how are we looking today? Pretty good. Pretty good. Everything doing nicely. 34,821 going up again. Pretty good. And yeah, just beating the S&P 500 in unrealized as well. Lovely. Oh, and another person has messaged me about section 1310 in the Trading 212 terms and conditions. Right. Gonna have to talk about it, aren't I?
The sucker's going up.
Welcome back, everyone. My name's Paul. I'm brand new to investing and I've started a dividend reinvestment portfolio with Trading 212. This week, Trading 212 updated their terms and conditions and I thought everything was fine. There was absolutely nothing new in there that could really cause any controversy. And to my surprise, everyone started banging on about section 1310, like it was never there before. But in truth, what you should really be worried about is section 13.2 all the way down to 13.10, because that all covers sub-custodians and custodians to do with the nominee status of your shares. Technically, this means you don't own your shares, but it doesn't mean you don't have rights to your shares. First of all, this isn't new. I think I covered this in a video way over a year ago. Trading 212 holds your shares in a nominee account under their name or someone else's name, but you and Trading 212 both have a record of who has bought and sold shares. And if you want all of that information, you can download it from Trading 212 simply by going into your history section and exporting it as a CSV. They also email you with contract statements to let you know what's been bought and sold. It's probably in your best interest to keep a hold of them. So this is nothing new, and I'm sorry to say, if you didn't already know this, then why are you with an investment broker? Because this situation is not unique to Trading 212. Here are the guidelines for free trade, eToro, and Vanguard. Yes, Vanguard. Vanguard hold all of your shares in a nominee account, and they hold all of your cash in a separate bank account as well, just like Trading 212. Even Hargreaves Lansdown has a full page that tells you how they separate your shares and your funds into an omnibus account. And on Hargreaves Lansdown, you are welcome to have all your money separated from everyone else. It'll just cost you $7,500 a year. So the second thing to know about nominee accounts and not owning your shares is that it's not unique to Trading 212, and in fact the two biggest brokers in the UK both do it as well. But Paul, what about client assets being used to pay off creditors first? While all of the custodian and sub-custodian rules are written a little bit differently for each company, they generally say the same thing. In fact, Trading 212's main crime here is that they just copied Vanguard's. And the main problem here seems to be a fundamental lack of understanding in how the FSCS works. The Financial Services Compensation Scheme is a little scheme that's been put in place to kind of help protect us from any fraudsters. It's existed in 2001, but in 2008, when a lot of banks and a lot of mortgage providers all went bust, they started trying to fly in here. These guys started to indicate that they would have to use client money to start paying off their creditors. And here's a quick lesson for you. In the investment world, when a company goes bankrupt, common investors come last. It goes administrators, debtors, lawyers, preferred shareholders, and then you. Unfortunately, in this game, because you're not rich, you come last. And to illustrate this point with Trading 212 a little bit further, I'd like to tell you a story about a company called Beaufort Securities. In 2008, Beaufort Securities got found out by the SEC for doing a little bit of fraud. Beaufort held about £500 million in UK client assets. Bear in mind that the last update we got from Trading 212 was that it held $1 billion in assets. This led to Beaufort going into administration, and it had a lot of debts on hand. It also had a huge pool of client money, and because it owed all of that debt and it held all of that cash, it had to pay it off, even though that cash was money from common investors. After a little bit of legal jiggling, anyone with under £2,500 with Beaufort was able to get all that money back, and anybody with over that amount was limited to paying £10,000 per person. Pretty scary, right? But this is what all banks, brokers, investment funds can all do with your money. However, the FSCS does come in to save the day eventually. In the end, 97% of all Beaufort clients were able to get their money back through a claim through the FSCS. This is unfortunately how it works. The company will go into administration, it'll have to sort out all of its money issues, and then in the end, we get to claim back our money after that. It's a horrible and long process. These people only got paid 2 years later. So going through something like this is probably something you want to avoid. Now, I will happily criticize Trading 212 when it does something silly, but this isn't news and it's not unique to Trading 212. So please stop making important financial decisions based on what idiots on the internet say, including me. I don't understand how someone can sign up to a broker and not read the terms and conditions of other brokers as well. If you can't figure out and accept the risks of your own broker compared to other brokers, how the hell are you going to figure out if Tesla's batteries are actually more powerful than Volkswagen's? How can you possibly say that Square is going to be better than Visa? And how could you possibly be sure without someone on the internet telling you that hedge funds are triple leveraged and there's going to be a massive gamma squeeze? It would be nice for Trading 212 to come out and provide a little bit of guidance with these amendments. But the truth is, these terms and conditions are put in place to protect for future events that Trading 212 doesn't even know about yet. A lot of the stuff about sub-custodians and nominee accounts held abroad are simply put in place because I think they're trying to bring markets from other areas. It might be nice in the future for Trading 212 to add something to the app or the website that might inform you when something is inside or outside protection of the FSCS. But again, that's likely the same for any broker. Trading 212, please improve your customer service and have more contact with us. Future Paul here, just back in for the chat, and magically Trading 212 did reply, and it says pretty much everything that I've just said. They said that 1310 is intended as a clarification in line with CAS 6 and CAS 7 of the FCA handbook, which are all about the brokers having to stay in line with FCA regulations to protect your money. I'm not saying that Trading 212 is safe by any means. It could be committing fraud, it could go into administration, we don't have access to its accounts, so we really don't know how well Trading 212 is doing as a business. If you are worried by something like this, then yes, you need to get to another broker. But it's on you to understand exactly what you're getting into. By the way, if you don't like Trading 212 anymore, sign up to eToro through my link in the description below.
I'm amazed how many people own stocks. I'm amazed how many people own stocks. The sucker's going up.